we will jump over to Noblesville. If I remember, you were pretty hot on Noblesville last month.
I always am. At least I've been consistent with this one, Mike. All right. Consistency is key. Now, we probably should have added a little separation between these market reports because I'm still on a roll. So here we go. I mean, look at your median rental price. We're much higher than where we were in January of last year. So what I was saying at the beginning of this, when we got into the Indianapolis, is not actually ringing to be true. I mean, we're seeing higher rents in the Noblesville market than we were seeing 12 months ago. And we see the sneak peek there. We're going to be trending up as we get into February. So, I mean, this is awesome. Active homes in the market, it's very close to where we were last month. We were at 113. This month, we're at 118. And yet we're still seeing an awesome trend in our median rental prices. Average rents are $1,850 right now, down just over 2.5%. Who cares? I'm not worried about the 2.5%. I think that's going to leverage out, no problem. I'm not worried about that at all whatsoever. Now, what I am absolutely tuned into is what? Your average days on the market. 32 average days on the market is absolutely stellar, absolutely stellar. Last month, we saw 45 days on the market. So this month, we're down 28, nearly 29%. I wasn't even concerned when we were seeing 45 days on the market. I knew it was going to trend down. I mean, this is consistently seen a very healthy market. And this is a price point for an investor that you can absolutely afford. I mean, your average sales price for your investor point of view at 337 is up 3%. So not only are you seeing amazing average days on market, you're seeing amazing average rent cycles, but you're also seeing an appreciation play here in the Noblesville market as well. And I absolutely expect this trend to continue without a doubt. You're buying in Noblesville, again, lock in your 401ks, take out your loans. You're looking into this market.
Yeah, we talked about it last month, and I think we need to talk about it every month. But, you know, the markets that we highlight, you know, are also appreciation plays because they're strong markets with good fundamentals. And I mean, a 3 to 5% appreciation, that really needs to be in your calculation of your return on investment. I mean, for example, at 337, a 3% return, that's another $10,000 that you have put in your pocket. I mean, it's equity that maybe you haven't tapped yet because you haven't sold it or refinanced it. But I mean, that's definitely something that needs to go into the equation. And I think that people need to consider that when purchasing a home and where they want to purchase. You know, if you're looking for cash flow, you may want to think about the Indianapolis market because the purchase price is what, $100,000?
Yeah.
But, you know, on average, I mean, this is a little bit painting with a broad brush. Probably not going to see as much appreciation in Indianapolis as you are in some of these what we call donut counties, the surrounding counties of Indianapolis. So it depends on what you're looking for. If you're looking for the immediate cash flow, maybe you trend towards Indianapolis. If you're looking for safe, stable, and appreciation, you know, some of these Hamilton County or Donut County homes might make a little more sense.
Yeah, what a great explanation. Exactly. And the appreciation play is something that goes overlooked. It's a conversation I'm having with new investors all the time. You just have to bring their awareness. Not only are you looking for a cash flow, and I get it, right? You want your property to cash flow, but you have to factor in your appreciation play, especially in this current market, right? Where if you're taking out a loan at 6-7% and your purchase price is probably a little bit higher than you. I mean, you're buying at the top of the market, more or less. So you've got to factor in your appreciation. We're going to continue to see appreciation in this market, in the Fishers market, and this rings true, in my opinion, for what's on the west side, the Avon, the Brownsburg areas that we also do market reports on. You're going to see appreciation, and I agree. You still are going to see appreciation in the Indianapolis market in general, the actual metro area. But these suburb areas is where your appreciation play is, as well as if you can find a property that is also cash flowing. You're a king. You're a king in this market.
Absolutely. You want to jump to that next slide at all here?
Yeah, let's just take a quick peek here. You know, this again, it's just data that you're going to want to have on hand, just to trend activity over time. But I mean, this is stuff that we've just finished talking about. Your active homes in the market at 118. We're seeing where we are, a sneak peek there into February. We'll see if that continues when we talk about the February market report next month. But I mean, it's almost identical to what we were seeing last month, right? I said we were at 113 in December. We're at 118 this month. It's just a safe market, I think, to be a part of. Days on market, 32 days on the market, which rings almost identical to where we were last month. That's our last year rather. That's super interesting to see. And I mean, and I like this. I love this graph because, you know, before we put this graph together, I was really just pulling from memory, right? What was I feeling here in the Noblesville market? Well, this is exactly what I was feeling. And none of these other days on market reports, the trend over time, are you going to see something that looks like this? None of those numbers scare me, right? You get a little nervous when you see that 95 up there, but that's a 1 month fluke at 95. Who knows what was driving that at that time? But I mean, this is a safe market. When you're seeing 44, my goodness, down to 18, at 50, 27. I'm not afraid of any of those numbers, and I can beat every one of those as long as I'm in tune with the data in front of me.
Totally agree. Yeah, these days on the market might be, we've never done a side-by-side, but this might be the healthiest trend of all of the markets that we do. I mean, like you said, there's kind of that one weird month of 95. We had like March, April was just kind of weird in terms of the days on the market, but gosh, I mean, everywhere else, I mean, 32, 44, down to 18 days on the market. I mean, this is, in terms of days on the market, this is maybe one of the healthiest markets that we have.
Absolutely. I couldn't agree more. Noblesville. And then a close second is the Fisher's Market. But Noblesville is where I'm putting my dollars right now.
All right. Well, let's wrap up Noblesville.